Hi Manoj.
Hi Ram.
So another tantrum by the inimitable US president. I don't want to even take the name. So let's dive in. China has been slapped a 100% tariff. Already they have a 30%, so 130%. So as things stand today, I mean, we all know tomorrow it could be a whole new world in Trump's eyes. As things stand today, let's talk about who gains as far as India is concerned, and who loses, or for whom things won't change much. We know that certain industries, we also have a 50% tariff running on our key companies. But given this new scenario, we always have to look at what is likely to happen when the assuming the trade is a giant balloon, and you put pressure on one area, the balloon will move to another area. So what parts of the trade supply chains could move to us, assuming things remain the same, and what parts continue to suffer. So multiple sectors, right? Textiles, toys, defense, and gems and jewelry, and whatnot.
So first, the broad picture. Okay, what do tariffs do? Tariffs increase the cost for the end customer. Okay, because the country which is supplying, uh, it has to pay the tariff, which is ultimately recovered from the customer. So there are only two possibilities: either the producer absorbs the tariff, which makes products, the margins are squeezed, or alternatively, it is passed on to the consumer, which leads to increase in prices. Uh, Most of the times, particularly when products are price sensitive uh, and not a necessity, then consumers choose products which are less expensive. Okay, so multiple industries will have multiple impact. Now, you mentioned, let me begin with textiles, because India is one of large exporters of textiles. Our industry, our companies have already taken a big hit when 50% tariff was announced. Okay. Uh, Reason is that there are competitors, say Vietnam or Bangladesh, who can probably supply textiles at a much lower price because of a lower tariff rate for them. So, yes, China's tariff has been increased to 130%, India's is only 50%. So, that does create an opportunity for us, but we should be able to differentiate from what is being supplied by Bangladesh or Vietnam, because their tariffs are cheaper. So something which is very very dependent on price, consumer is going to pick what is cheaper, then we may not significantly benefit. It is countries like Bangladesh and Vietnam who can benefit. However, there are certain companies, Indian companies, which have production capacity in these countries, and they could probably be one of the winners if they manage to.
One of our portfolio companies does that in the textile space. So, yeah, the other imponderable here is what is likely to happen with the US India trade deal. As we speak, negotiations are definitely happening very actively. The Indian team is now going there. Earlier, the US team was here. So, I would expect some closure in the next 6 to 8 weeks. There's a gut feel, or whatever you call it, because I think US will want to definitely, and things have mended between US President and Indian Prime Minister Modi ji. So there will be, while India has rightfully so stayed firm on some aspects. India didn't even attend this summit in Egypt, the Gaza peace thing, um, for valid reasons. So I think India is firm on certain aspects, whether it is geopolitics or trade. But if the trade deal works out something favorable for Indian companies, then do you see this China tariff adding a tailwind to some of the Indian sectors?
Definitely. See, uh, as we have seen over the last couple of months, the tough stand taken by both the partners, both US and India, everybody understands that it is a lose-lose situation. Okay, both parties are playing tough negotiators, but end of the day, both parties want an amicable, long-term workable solution, which will see some give and take, but eventually, maybe 2 months down the line, 3 months down the line, an agreement will be reached. And hopefully, after that, the 50% tariff would probably get knocked off, which will add to the competitive advantage of Indian textiles. So, what we are losing out on purely based on price competitiveness to countries like Bangladesh and Vietnam, we should be able to regain that ground and then compete for the market that is opening up because of the increased tariff on Chinese textiles. So yes, definitely some of the companies would benefit once the trade deal gets signed off. Having said that, Ram, I should also caution that what we are talking with respect to India and US also applies to US and China. I don't think the 100% tariffs are going to stay permanently. It is a who blinks first kind of a game. China says we will not supply rare earth to US, and US says I'll slap 130% tariff. But you know, eventually both the parties will come to the negotiation table, and we might not see these 100% tariffs coming up. So situation will continue to be dynamic, and as observers we and as actual players, the companies have to be on their toes.
So we've covered already textiles to some extent. So let's get into a few other sectors um, and see. It could be toys, electronics, etc., etc. So whatever comes to your mind, and see if things stand the way they are today. US China at, let's say, 130%, and India at 50%. And I'm hoping that India things will change. We'll be back to 25% or something like that. It will definitely not be zero because Trump has a vote bank, and I mean, he definitely has a genuine concern about the trade imbalances, the trade surpluses, etc. So let's cover a few of them just to get an idea of how things may pan out.
So you mentioned a few industries, and let me share my views on each of these. Um, Toys, uh, China has been a major supplier of toys to the US. Close to 70% plus of toys imported by the US are from China. Okay, Indian toy manufacturers have slowly established their presence and are competing with Chinese products. Given this scenario, the higher tariff on Chinese products will definitely give a lot of competitive advantage to Indian toy manufacturers. So that is one sector where I clearly see Indian players benefiting from this higher tariff as things stand today. As you rightly said, and things might change, but given current scenario, current tariff rates, toy manufacturers should benefit. Consumer goods, again, particularly electronics, mobile phones. Okay, these are areas where India has slowly established itself as a trusted brand. So people no longer smirk at the Made in India brand. They actually look forward to now. Made in India is a respectable label, and therefore, in this industry where India has scaled up significantly, mobiles, as we understand now, India is probably exporting more iPhones than what China is doing, and therefore in these circumstances we can expect definitely a lot of business to move from China to India. So mobile phones in particular, electronic goods in general, consumer goods are all areas where
In just 4 years, mobile phones have jumped from around 2.6 billion US dollars to 5 times, almost $12 billion. Of course, iPhone is a big component of it, but nevertheless, also there's a significant expansion of our supply chains, maturity, etc., etc. And India is also soon going to achieve full stack Atmanirbharta in solar cells as well. So that also could be a potential export element.
Yeah, but then we have the rare earth factor to contend with there. So, as I said, situation is dynamic, and we don't know how things are going to pan out on a day-to-day basis, particularly with Trump. But yes, as things stand today, definitely an advantage. See, what an Indian producer should do is use this window where the China-US spat is going on to establish relationships with US consumers. Wherein people don't shift from India to China, China to India purely based on price. So that is what we need to work on. Another angle to this, Ram, given this trade tension between the two countries, it gives further fillip to the China plus one policy. People don't want to be completely dependent on China because both the partners, both are very strong economies. They can withstand each other's pressures, and therefore the trade war can actually last a little longer. And companies would not want to suffer this uncertainty. So I feel this situation will push more companies to adopt the China plus one policy. And as we earlier also said, India is definitely one of the leading players to take advantage of this situation. So, long and short of it, clearly it is a beneficial move from a purely India perspective, India players perspective. But again, we need to be very cautious. Things are dynamic, things can change. We don't know which way you know the president will wake up the next day and decide what he wants to do on that particular day. Uh, but
In this case, he seems to have been provoked by what China itself initiated in terms of the rare earth restrictions.
correct. So, interesting times ahead, I would say. But again, from our investors' perspective, the word of caution would be not to jump on this particular news and start buying stocks left, right, and center. Uh, as usual, focus on the fundamentals and see what kind of long term relationships are being built, what kind of brand building is happening, and therefore, uh, the advantage should sustain beyond what is the current tit for tat kind of an environment. So that is where I think we should be looking for winners.
Sounds good. I think we have a very strong domestic consumption, which is around 60% plus, and it may even touch 65, 70%, which acts as a buffer against any major trade shocks. But this is an opportunity. Definitely, China is very strong, and India is looking for it's a window, as you rightly said. Window is the right word for Indian manufacturers to jump on and see if they can start a relationship and increase their share of exports. End of the day, the export uh, growth has strongly correlated with the Indian BSE 200 or Nifty 500 growth. That's a great barometer. Last 1 year, the growth kind of was flat, markets were flat. So it's an interesting correlation. So uh, hopefully with exports again picking up, trade deal getting finalized, and it's good. I think all these shocks are giving us also an opportunity to broad base, diversify our trade mix, not make sure we're not dependent on just one country alone. And the fact that IT is also kind of in the post AI world, and Trump trying to increase local employment, the H1 issues that we talked about earlier, it's going to make us strong as a country. I think India is definitely needs to get into the post IT services world, And there are a lot of sectors where, whether it is hospitality, manufacturing, where some of this IT talent, which has a lot of experience, could actually add a lot of value.
Absolutely.
So, on that note, let's close this episode. Um, Happy investing.
Happy investing as always.